Alright, how's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. Alright, so I got asked to cover AVCT today, and I've been doing a little bit of research, which is why it's getting a little bit later start than normal. I'm just taking a look here. So it looks like, obviously, most of you guys that are probably in on this already know kind of how this works, but what's up, Goat? So everyone thinks that Microsoft's going to acquire them, which is why they did not file the basically reverse split, which they should have done by now, unless they were going to be delisted. And the thought process behind that is, AVCT could be bought by somebody that needs, cloud, because they own, I believe, a company called like Candy. What's going on, Goat? What's up, CJ? What's up, Chris? So AVCT retained Northland Capital Markets to advise it on this view to overcome the company's financial woes. This is the only problem with this thing. So obviously it looks like they want to obviously, clear up some of their stuff, because they want to make themselves as attractive as possible if they're going to get acquired, right? But if for some reason that does not go through, you're looking at the stock being delisted, because I think for compliance reasons they have to do this by, I think it's like September 30th or something like that. Is that about right? If I remember reading that correctly. So if they're not compliant, then they would get listed. They would just not meet. NASDAQ's got like a requirement thing, which is like that you have to be at least $1, or you can't have a market cap of less than 35 million for 30 days. And so right now, I think, let's check the market cap on this thing. Let me pull it up. Hold a second. Let me pulling it up for you guys. All right, so AVCT, this is the one everyone wants to talk about, right? All right, so the reason why everybody's so, interested in this is because basically two things are going on. You have the company running out of cash, right? They've been burning a ton of cash, and they only have like a month left. So they really need to have these, let's see, is this from today? Yeah, these are the 92 million warrants, right? At 30 cents, right? They're in the process, right? So the instrument must be registered with the SEC. So they need cash badly. That's like straight up what you need to take from this. This company needs cash badly. If they get acquired, they'll be fine, because if someone like Microsoft acquires them, they'll be fine, because they would just get absorbed into like Microsoft. That would mean that at some point Microsoft agrees on a certain share price, right? They say, okay, we think your company's worth 45 cents a share. That means that obviously they would be willing to buy the entire float up and then acquire the company at that set price. So if you bought them at, say 18, then, you make some money on that, right? So the issue, though, is this, right? You've got these, they've canceled these now, right? The 15-cent ones, the notes convertible, I think it was. Where are the notes convertible? Yeah, so these ones are still, like, they've already depleted all these, right? So that was the 78 ones, right? Fully ratcheted. Yeah, just last updated here. So, here we go. So these now have been depleted, right? So they've depleted all the notes convertible. They might have a little bit of cash to make this all go through. I mean, I think the biggest problem is there's a lot going on behind the scenes on these things that nobody knows, right? So, like, you've got players like Hudson who are known in the past for, like, pumping and dumping. They don't have any more in the ATM, but there's, like, just a ton of dilution here, right? Like, they do have a ton of dilution that is sitting here. And so what you have to figure is, like, okay, well, you know, if they're going to get acquired, they're going to get acquired. If they don't, for some reason, they're going to get delisted. So, like, it boils down to how much do you trust the rumors that are going around? Like these are September 22 series, like, warrants. They will be registered any second, right? And it says here, all right, so the pursuant to the settlement agreement, the holders agreed that they would not directly or indirectly sell or otherwise dispose of any new shares on the calendar day, including September 30th, 2022, to the extent that such sale or disposition of shares would exceed, 10% of the daily composite trading volume of the common stock through the time of the sale on such date, excluding any sales of new shares at a price greater than 30 cents a share. In addition, the company agreed not to issue or sell or offer to issue or sell or any equity or equity-linked security through the lien release date, which is, I think, September 30th here, subject to any exceptions. In addition, the holders agreed to release any liens and security interests granted to the holders in connection with the issuance of the convertible notes effective. So basically, they eliminated, I think, some of the ones that were at 15, and then they, I guess, have these ones here at 30. Let's see. Hey, yo, what's up? Awesomeness. We're just going through this. So it says right here that the holders agree, blah, 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 convertible notes effective on the issuance of the new shares on the first date on or after. So October 6th is when, I guess, they have to hold them till. So they can't issue out anything before October 6th, it looks like. All right. So all new shares would have to be delivered, notice, blah, 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 before the 5th, which is, I guess, the lien release date. The settlement agreement also contains mutual releases of each party with respect to the right of enforcement certain provisions of the settlement agreement. Clear as mud, right? Okay. I'm going to have to actually read through probably the filing again, because I think what's happening here... Yeah, they've got conditions and restrictions, right? So... So they've got the Series A warrants, 92 million of them, right? Along with an additional 7.2 million shares of common stock. And I think those are at 30, yeah, and they're excluding shares at a price greater than 30. So 30 is basically the line in the sand. Yeah, so, and this is the problem with these small caps, right? So they get, like, in deep with these, like, hedge funds and, like, you know, people willing to, quote-unquote, lend them money for, you know, keeping the lights on, essentially. And what ends up happening is they get their claws in on you, like they did on Mullen, Tyrion, a couple other ones. Yeah, I mean, like, it's going to be serious dilution. If this is the whole thing, right? So if they get money from this to basically stay afloat, right? Because we said that they're out of money, right? So their cash is really low. So if you go here to cash, the estimated cash right now is like literally out. Like they need to do something now. So they need to get some cash or they need to get acquired. Like it's that, so this was what was on the table previously. I don't think these guys have updated it yet. And they haven't updated this portion. I can actually write Sean if you guys want, and we'll contact him and see what he thinks about this. Because he's had some good insights before. Let me just... Hey, Sean. People here are curious your thoughts on AVCT, the recent filings. All right, so he's away. We'll say, obviously, when you have time. When you have time. All right. So we gave Sean a heads up that we were curious of his thoughts on this as well, because I mean, to me, this looks like it's either you're going to hit a home run or you're going to get piled upon. It was like, remember SST when they were like, oh, well, there's no way this, this filing could possibly go through as fast, right? And then I said to everyone, I said, listen, like, there is a risk because these filings look like they're speeding up, not slowing down. And everyone was like poo-pooing on me for saying that and, saying I was spreading FUD. And what happened to SST? Do you guys remember? Like, if we go back to SST, right? So at the time, if we go to the daily on them, I mean, I specifically remember because this ran hard, right? I mean, this thing went from basically like, what was it? At the low, it was like $10 a share, and then it ran all the way to 30. And everyone's like, oh, well, And this thing can go back up at some point. Did they fill the gap they left? They left a gap up here between like 19 and 16. I don't think they ever filled it back in. Well, they got back up to, that's 11. So no, they haven't filled that gap yet. I mean, it's high risk, high reward. Like, I mean, if you're willing to, kiss that money goodbye if the company gets delisted, that's fine. If you're fine, hitting a home run, but I wouldn't put my life savings on it. But for some people, they're interested in it. Yeah, I mean, I don't think they're wrong to think that a company like Microsoft could be eyeing them. I don't think that's incorrect, but at the same time, this company's they've been hurting for a while. So like, I don't think today was as bad. I mean, you guys have to remember this thing was down here in like 13 cents just a couple of weeks ago. So like, it's up here, and this is where I think retail does a good job of freaking out because that's retail reliably sees a 10% move and they flip out. So yeah, so once again, this is a high risk, high reward play, and it's up to you guys how you want to play it. Personally, for me, I don't have a position in this, so I'll just tell you how I see it, which is, and the short interest isn't even that high that I saw. I mean, like, everyone's like, oh, they're shorts. I'm like, it's not even the shorts. It's just, right? It's AVCT. Like, what's the short interest? Like 12 million shares, which is like 12, 13%. Utilization's 40%. Like, I don't specifically think this is like a hard to borrow stock. I mean, I honestly don't. They have their float's pretty big. The biggest thing is if they get acquired, then yeah, they will move because they'll be moving up to whatever price they get acquired for. So they want to clean up their books as much as possible, obviously, if you're going to do that. But like, the utilization's plummeted. So I don't know if they've already diluted some, because it kind of looks like that, right? Like, it almost looks like they've been diluting, like, massively. Like, maybe on this run-up, they were actually selling shares on. Like, I wouldn't be surprised if you see... I mean, like, literally, if you look at this, the short interest estimate is, like, $3 million. That's nothing. Like, I just want to make sure you guys, like, put that in perspective. Like, here's GameStop's short interest, right? Go to GameStop. GameStop's short interest right now is like 1.4 billion, right? This thing has short interest of like 3 million estimated, like 3.75. Like, yeah, it's gone up, but at the same time, so did the price. And you know what probably happened was this thing was possibly diluting when it was, you know, up here, right? So when it kind of was making this run, they started, you know, issuing shares into it. So, had to chime in. It's not hard to borrow for sure. My broker has 3.84 million shares, and the fee's 27%. Yeah, cost of borrow is like 28. Yeah, but what? I hope everyone gets my point. Like, usually when you see utilization maxed out and you see like something running. But like this dropped like a rock. Like, I think they might have actually tapped into some of these warrants already. It's possible, which is also why the price went down so much. I mean, I think it's possible. I think what we need to take a look at is, okay, so the cost to borrow also has been plummeting, which means I think shares are getting like... I would be curious to see... They filed today, though, right? Did the float change? How many shares outstanding did they have previously? That's what we need to find out. All right, so they're saying the float right now is like 156 million. They're saying 126. So I think there was dilution that happened, right? I think some of these warrants already got issued in, and that's what made the stock drop. And then they also have this on top of it, so... Because they needed cash. Like, that's, like, they needed cash. Like, they probably wouldn't even get acquired if they didn't have the cash, because, you know... So, let's see. Yeah, I mean, the free float's like 93 million, they're saying there. Let's see what they've got. So they're saying the float's 156 million. So, yeah, I think there might have been dilution that's already happened. It just... But if we have a filing, it should have shown it, right? So if we go back to, for example, August. Let's look at their shares outstanding. So they had... Let me see this. Common stock, 98 million and 88 issued and outstanding. It's a weird way of doing that. Hold on. let's take a look. Feel free to chime in and ask any questions. I'm kind of trying to take a look at this live with you guys, because a bunch of people had questions on this thing and they wanted to know what was going on, why it went down. And to me, it looks like, unless these numbers add up to, I'm just typing them in real quick. I mean, that's if you add these two together, right? But neither one of those has. Let's do this. I'm going to do a Control F and do shares outstanding. So as of August 15th, it was 140 million shares outstanding. There we go. That's what I was looking for. Okay, so if we know that the shares outstanding back in August 15th was 140, and these guys are saying that there's 156 million for the float, that means that they issued out, let's see. So if we're saying 156, 180, we'll just say it like that, right? Minus 143, right? 140, 340, 478. That means they sold off around close to 16 million in dilution, probably to raise some cash. So that's probably what they did on that run. Remember I told you guys it would probably run on a warrant run? That's probably what this was. So they push up the price, they issue out the warrants into it, right? Could be here too. And now you've got all these people saying, oh, well, the thing's going to get acquired. And it can. But, I mean, technically, you still have a gap down here at 23, right? 23 to 24. Like, it's small, but it's there. So you do have a tiny gap here, which is like, Or, I don't like gaps up when you're supposed to be running, right? So they've got a squeeze signal for September 20th, right? They're the most talked about stock. Let's see, on Fintel, I think I saw that they were the number one gamma, right? Yeah, large float. Probable history of diluting. Yeah. Well, and so this is all reliant on if Microsoft or somebody else acquires them, right? Because if not, they're in a bad situation still because they... Funny, all the hot stocks are always bad or suck. Not liking this AVCT at all. It will run huge tomorrow. Yeah, it may, and then... at some point it will probably do one of these because it still needs to fill this gap here, right? Like, so you have a gap here, and you also have, if they're not acquired, then they're not a good spot because if they get pushed up here, people are going to short them, and then there's going to be a ton of people shorting and making sure the stock goes down, which means that there's going to be a lot of retail that freaks out and sells, and then it just it causes a whole bunch of other problems. So, AVCT, here we go. I mean, let's take a look. But I think what was the Gamma Squeeze one. They're number one right now, right? They've got a high Gamma Squeeze score, and that's probably because if we look at their options chains, it's probably high. AVCT options chain. Yeah, I mean, there's a ton of open interest on this thing. Like, for October 21st. Yeah, there's a lot there. And they bought it all at 50 cents. Now, none of these are in the money. Like, if they just keep the stock price at like 49, 48, they're going to burn a lot of premium. Like a ton. Yeah, I mean, I'm hoping for a nice pop on the market just because, I mean, everything's been bleeding so badly over the last. I mean, here's the thing: we're not in a good spot. Like, we're going into a recession. The question is, like, does it go back up before it goes back down? You know, how long are they going to let it be down? We'll see. You know, like, we've talked about this before. You know, you hit the peak, you're here now. There's still gaps down here at the 340s level, somewhere around here-ish, when we gapped up like a couple days in a row. Yeah, it was around this time frame. So, I think it was around this area right here where we started just like gapping up. This is like the election going into November. I don't think it's letting me go to November, but maybe on the 1 year. No. All right. Anyway, so what do you guys think of AVCT? I feel like I'm being pretty pragmatic about it. Like, I'm not like biased in any way. I don't have any position in it. I think it's possible that there has been some dilution because when we looked at this filing right here, you see that as of August 15th, there was 140 million shares outstanding. And then when we look at some of these, they're saying 156. You know, they're saying these guys still have it as 126. So they didn't even update. Yeah, this is the problem with all these different products is, you know, they're not usually up to date. So I would trust at this point right now. I don't trust Ortex's numbers now because you already saw that they had the wrong shares outstanding. Like, here's literally a filing from August. Like, you've had, this is from June, right? As of August 15th, when they've put out the you know, this is what's annoying about the industry is, like, it shouldn't be this hard. Like, everything should be going through the SEC, and all these different sites should be pulling their information off, like FINRA, and like it's so inefficient. Like, legitimately, this is so inefficient. Like, whenever they update this, it should go to all the different, like, everyone should be able to just pull this information into their systems. Like, why does Ortex have this wrong? You know? Like, obviously, they're doing a much better job of keeping up because they actually have the new dilution in there, probably. Jake, you said that. Oh yeah, they're getting the volume right now. I mean, also the stock's cheap, so like retail is actually willing to like look at it because it's like 30 cents. You know, even if you're wrong, but I found my TP reports. Do you need TP for your bunghole? All right. Sorry, that was a Beavis and Butthead joke from the 90s. I know some of you guys know it, and some of you guys may not. All right. Yeah, it's if they get acquired, it's going to be great. If they don't get acquired, then you own a stock that literally is actively diluting, and it will go even lower and probably need to file for being delisted. And then you'll be stuck with a penny stock with pink sheets and over the counter. Because, I mean, they should have filed already. Yeah, that's why people think that they, would you be able to find the free float of FOXO? Let's just see. FOXO. They're small. Roughly 700K float after redemptions, but had 1.7 million forward purchase agreement with Meteorota, or whatever that is. They got warrants as well. So as of September 19th, the company has issued out 33 million shares of Class A right there. So hopefully that helps you right there. As of September 19th, the company has has 33.052 million shares outstanding. Yeah, the warrants are at 11 right now. That's what I'm seeing here. But roughly small, it's got 33, what was it, 33 million shares outstanding? Yeah. So, I mean, we'd have to take a look and see, was it FOXO? When was that written, though, when they wrote this thing? It was this month. All right, so let's take a look. FOXO. All right, make sure this is the right stock, right? What happened here? Oh, I'm trying to make sense of what's going on here. So the stock went from 10 to 150, 1.5. Why? What's wrong with them? This is like one of those rabbit holes I want to go down and figure out what's going on with this thing, isn't it? I mean, there's a lot of these, like IPO or DSPAC or, SPAC, and then they literally just get beat down. Like, look at, DTC, when they incepted, right? Like, their track record has just been this, falling knife, right? So let's go back to this thing. Let's figure it out. All right. So shares outstanding, they have at 41 million. but we read that it was 33 million. So there must have been some sort of extra. Something happened. They must have issued out more shares or something. The warrants wouldn't actually hit, though, until you actually exercise them. So the float would change as you exercise the warrants. But if the stock was at 11, they would have... No, the warrants are 11.50, and I don't think it got up to past 11. So the warrants should still be in place. But, let's see... Something happened. All right, so let's see why. Okay, so they do have redeemable warrants here, and they do have, it looks like, consisting of 1 share of Class A stock and 1 half redeemable warrant. Non-accelerator filer, emerging growth company. That's what they all mark. Let's look at their balance sheet. Wow, what did they do with their cash? I mean, they just like have their asset, or have their total assets. I mean, it's not like completely have, but like they almost have their assets, which a lot of it was cash. So what did they do with it? I mean, that's a huge drop. And look at their accounts payable just skyrocketed. Oof. What happened there? Oh, and they also have Class Bs as well. Interesting. Okay. So this is one of those plays where they're going to be counting the A's and the B's together, probably, and have like a weird float that's not worked out perfectly. This is what DTC has as well. So 36 million shares authorized. All right, we're gonna have to deep dive into this thing if you guys want me to, but like, cash flow just. What did they do? Oh, you know what it is? It's because it's a D-SPAC. Okay, that's right. If I forgot, it's not an IPO, it's a SPAC. So the reason why they had all that cash was because literally, like, it's a blank check company, right? So it's like the purpose of, like, merger and, you know. This is how like, all these people that get in before, and then they sell when they can get some money out of it. because a lot of times they buy in much cheaper, and then they're able to like unload when these things come to market. And basically, like from what I understand, at least, the SEC does not like SPACs because basically most retailers get screwed and most rich people make out. Which shocking, right? That would never happen in the market, right? Never happen in the market where, right, that retail investors get screwed over in hedge funds and, you know, all these people who wrote the, yeah, I mean, so just looking at this right now, like, I mean, you can even see, like, they're just unwinding this thing. So, yeah, maybe at some point, but, like, you better love the company. So, yeah, so they have a lockup period for the, yeah, I mean, and they have to at this point because, like, they basically like, reset their company when they came onto market. So, they're going to need to kind of fix and right the ship, and then at that point we'll see who buys in. But I'd be curious to watch the 13Fs on this thing to see who's buying in and who's not. And I'd probably have to actually look at the product because, you know, I have no idea what these guys actually like do. So innovation, life insurance reimagined. Okay, so they're trying to do life insurance. Wait a second. We're changing how the life insurance underwrite and sell their products with a proven technology-driven. Oh, so you know what they're doing? They're basically looking this. If I'm correct about this, they are looking for basically markers for diseases to make sure you don't insure people who are going to like have some sort of like debilitating issue and die, which is already like weird. That's like borders on that weird ethical line where it's like, should this be allowed? Because then companies literally can like, yeah. I mean, once again, it could be profitable. It also could be banned because this is like literally like when you start discriminating on people's DNA, that literally can violate like probably like discrimination laws. And so this may not actually be legal in the future. They can sell to insurance companies and be an insurance company too. Yeah. I mean, I see what they're doing. It's smart. At the same time, it's like this kind of like borders on that, like, is this ethical or not? Because I remember having this, I took a class in, I believe it was called Human Heredity. And essentially what we were learning about was like about how like obviously human cells and all this stuff. But one of the conversations in the class that arose was like, if you knew you were going to have a genetic disease, like, and you find this out, is it ethical to tell the person or should you not? Because will it alter their lives? Yeah, Dirty. I remember that was a good movie. Gattaca. Yeah. It's one of those like weirdly like sentimental movies I always think back and I'm like, yeah, that was a good movie. The Human Will. Yeah, Jake. So I mean I get what they're doing. It's just this is that kind of like this is just a gray area right now. So it's like, you know, their balance sheet's not great right now. Yeah, Uma Thurman was good in that movie. Yeah, but I mean, so the question is, if you knew, right, that, for example, your genetics are working against you, would you alter your life, right? Would you actually, like, so if you knew you were going to have, like, you know, Lou Gehrig's disease and, like, deteriorate, would you, you know, do things differently? Probably, right? But there's the other side of that, which is, okay, would, you know, if you knew that information that you're going to have some debilitating disease, what if someone just, like, God forbid, commit suicide, or like, just it may alter people, and that's not 100% chance. Like, there's always variations that you can do. It's not usually like a life. So that's my only thing with this is like, it's like, okay, that's interesting technology. I don't think they're quite there yet either to be like, we're 100% certain that this person's going to. And so if you discriminate against that person's life insurance policy, is that ethical? Is that, But they're basically trying to say that they can figure out a better way of insuring people, which is like, okay. Yeah, I mean, I'll take a look at it. It's just, I do think it will probably go up, to be honest with you, because if you look at, like, I don't think it's going to be down here forever. Like, nothing acts like this and doesn't have one. It's had, like, what? Has it ever had a green day? One green day? Like, this right here, I don't think was green. Maybe this one green day? 1 or 2 green days? Yeah, this is not a normal looking stock. So, like, normally you don't have this much, downward pressure to the point where it's, now a penny stock off the bat. Like, people bought in at 10 and now it's a penny stock. It's completely oversold, even on the daily. Like, I mean, if we bring up the weekly, I'm sure it's even oversold on the weekly. Yeah, look at that. I mean, it's like at 0. It's at 1 point something, 0.16. So, yeah, it will probably bounce at some point. But, yeah, this is not a good looking. I mean, just sure, unless this thing is, doesn't look like they're getting delisted yet, but like, this thing's turned from a SPAC to a penny stock in a couple days. The MACD's negative. I mean, I don't think it's negative, but I think it's like maybe it is negative, I think it's 0.16. So like less than 1%, right? Or sorry, is it 1.16? I can't even tell. But either way, it's 1.6, right? Yeah, this thing's. Ugh. I mean, you can just pull up on the daily, and that's ugly. Yeah, I think it's 0.16. Good evening. How's it going, Jabez? Yeah, that's an ugly chart. So, all right. I told my wife I would stop at 11 so we could watch the new Lord of the Rings thing. Yeah, it's a rough looking chart, but I mean, just nothing acts like this, and like, I know the market's crashing, so that's probably this additional like pressure here, but like, that's a big move down, and this thing's way oversold. So yeah, like I could see a bounce at least back to like the 25%, like on the RSI. Like, I mean, nobody stepped in to buy this thing yet, though. So that's the only problem, is like we should see at least some buying somewhere, and we're not seeing anything. So, yeah. Okay, the other one people wanted was AVYA, right? Or is it AVYA? Is it AVYA? No, or is it AVYA? There you go. So I know Dirty and a couple people are on this thing. Is start buying $3 puts on BBBY yet? We can do that one too. We'll do that one too. Warrants are 10 cents now. If this thing goes back to 4 or 5, warrants will be like, yeah. Jake, I think you're right. I think there's an opportunity to obviously, that RSI is way oversold. So like there should be a bounce at some point. I do agree with you. I think the bounce will come, and there are going to be people who. Let me put it. Someone remind Jake. You're on the Discord, right? Someone remind me to take a look at it tomorrow when I get in the office. I am going to be in the office tomorrow, so I don't know how long I'm going to be there, but at least look at FOXO mainly as a what the okay. Is there a remind me? Oh, set a reminder. Hold on. Remind me target. Anon time. Let's do 10 a.m. Message FOXO. Look at this. Look at us. Who would have thought? Let's see if this works. Oh, failed to. Let me try it again. Remind. Because I put a bot on here to do this. Okay, so target and on time. Should I just do 10 a.m. like that? FOXO. What am I doing wrong? All right, what do you guys think? What am I doing wrong here? Do I have to put in the date too? 09. Oh, yeah, probably, because the computer won't know what day it is that I'm wanting it to do this. So we're going to say the 28th. Is that right? Is that tomorrow? No, 27. 27. 10 a.m. FOXO. Yeah, look at us. Boom. We got it working. Oh, we get a server webpage now? Interesting. Okay. So, oh yeah, we were covering AVYA. Right? That's what Dirty always wants to cover AVYA. I mean, it looks like it's consolidating. I mean, we've had bad days in the market here, and it's still kind of like holding up. It's kind of just chilling in the middle of on the RSI. I mean, they're trying to push it down, but it went up today. Let's see. I'm curious on their options chains. What is happening on that? Yeah, what's up, Andrew? I was supposed to watch Lord of the Rings with my wife. Hold on, let me go talk to her real quick. Let's go see if she's cool with me jumping on with you for a second. We want to talk to DZ. It's been a while, so let's see if we can get him on here, and let me see if my wife will be cool. All right, be right back. Go ahead and talk amongst yourselves. All right, can you guys hear me? All right, let me figure this out. I can talk to DZ if he's cool to hang out and talk with us. All right, just reading up on. So apparently we can do a web page for the Discord server. That's like the new things. Okay, let me find my headset. Hold on. Okay, so I think the way I have to do this is I have to make sure I don't have any sort of websites open. All right, to make sure there's no sound that comes out. Okay, so I've got all of them closed. Then I think I have to turn on this, and I have to turn on Zoom. All right, so open Zoom. Go up to DZ and start a new meeting. All right, participants invite. All right, we'll send this to DZ. Then I have to, I think, go to OBS and do this. All right. And then hopefully he'll jump in here and we will get going. I think I need to share screen. What's up, dude? Can you hear me?
Yeah. Hey, how's it going?
Good, good. How's it going, man?
Doing good, doing good.
All right, so where were you?
Let's see here. Yeah, Wisconsin, then Michigan, then back to Wisconsin, then drove west, South Dakota, for leisure, spent time with family in Colorado, then went up into the mountains for about a week, in southwestern Colorado, visited family one more time, and then drove from Colorado to Pennsylvania, go visit my parents and my brother and sister-in-law there. I had a baby nephew that was born about 2 weeks ago, so I was there for the birth.
Congrats.
Thank you. Yep, makes me an uncle officially, so
yep.
Super exciting.
Yeah.
Yep. And now, as of I think last early Sunday morning, I got back. 26 hours on the road due to, well, normally it takes me about 20, but there was a massive accident on Interstate 44 where this little Fiat, I guess, the driver fell asleep and went right underneath the semi-truck.
Oh, no.
Yeah, that was one of the worst things I've ever seen on the highway, but we had to sit and just wait for like 4.5 hours, and I got to that accident scene at like midnight, so.
You're like, oh, no, yeah, that's rough. Okay.
Yeah.
So did the truck go off the road too?
No, it jackknifed into both lanes on Interstate 44.
Gotcha. So just completely cross.
Yeah, it was one of those. Yeah, he just ran up, and then the thing just kind of went out from under it and went across. And
yeah.
I don't know. I don't think the trailer guy even saw the little Fiat. But I mean, it was like that happened way before when I got there. Just there was a wrecker guy that was right next to me, and he was talking to the accident crew that was up there, and He was like, "Yeah, this is what happened, and very unfortunate." But they needed like 4 hours to pry the car out from under the tires and all that. So
Ugh. Yeah.
yeah, yeah,
What?
don't drive drowsy.
Yep. I was gonna say, and where'd you go in South Dakota?
Badlands National Park, Mount Rushmore.
Very cool. I've done all those.
It's beautiful country out there. I have to say, like I've heard a lot about it. People say it's really nice, and it exceeded my expectations by a lot.
I was really surprised. I went out there for a wedding, and I was like, I don't think I'm ever gonna be back here. And so, yeah, I was like, how many times am I gonna be in South Dakota? I was like, well, better go see everything. So I literally took a couple of days off, and I drove out from Sioux Falls, where the wedding was, and went out west. And my only regret was I should have given myself more time, because like I was like, 2 days, that should be fine. I should have given myself a week, because it's pretty out there. Like I wanted to get up. I started driving up through like, I think it's called like Fishhook Canyon, and that's out by I guess you drive west. And I was trying to get up to what was it called? What was the one HBO show with all the cussing? Deadwood.
I never watched it.
Okay.
So.
Yeah, it was the town of Deadwood. I wanted to get up to Deadwood, and I kept looking at my watch, and I was like looking at my GPS. I'm like, there's no way I'm getting back in time. I was like literally pushing it to like drive all night and then get to my flight just on time if I didn't turn around right then. And I was like, I'm not going to see Deadwood. So I turned around and I got back with like 3 hours to spare to my flight.
Yeah.
But yeah, pretty country out there.
Yeah. Midwest is very just underrated in general. Even here in Oklahoma, like I know it's not like living in middle Colorado where you have mountains everywhere by the beach, but it's nice. I like it.
Yeah, and I was gonna say what was it called? The Black Hills are beautiful.
Oh yeah, those are.
Once you get up there and you're like, oh, this is pretty up there. Did you go to the Crazy Horse Memorial?
I totally blew past my mind to do Crazy Horse. Like everyone's like, I found out after the fact, they're like, "Oh, did you see Crazy Horse?" I'm like, "Shit."
It's huge.
Yeah, I drove past it too. Yeah, I was like, Crazy Horse. I'm like, "Oh, what's this?" But I also had to get to my aunt and uncle's place in Colorado that evening too, and yeah, so I was on a pretty compressed time frame. But yeah, I regret not taking like a 15-minute detour to at least like stop, take a picture, and then leave at the very least.
Oh, good. All right. So what have you been watching on the tickers? Obviously, we've been kind of covering some market condition stuff, but
yeah, this has been wild. So I'd say I've invested probably 90% of my time between the the VIX derivatives and the just flipping SPY puts and calls in both directions. So yeah, after just kind of more or less taking a month off. I mean, I was like hopping on here and there like over the last like 6 weeks or so, but yeah, I moved one of my accounts to just all cash, like a complete cash account, so I don't have to worry about like pattern day trading rules.
Yeah.
And yeah, I've been just like, I look, what's been a surprisingly effective strategy lately for me has been, does the market gap up or down in the morning, and then just basically take the opposite, because these gap fill algos have been working nonstop, at least until like the last couple of days where.
Yeah, where the SPY gap down, and then we haven't filled that up at the 4 or something. I could probably pull up the chart. Where's my...
Yeah, so, yeah, should I share my screen here?
Yeah, if you want to pull it up. But I was going to say, I know we gapped... Where's the gap? It was here. So it was like 4... Oops, I hit the wrong ticker. SPY. Here.
Okay,
Here it is. Up here at 4... Like 09... And it gapped all the way down to like 4, like 404.
Mm-hmm.
Okay, let me do this. You're up.
Yeah, I need to look at. Sharing my screen on there. Let's see here.
Yeah, I just changed it to the Retail Collective now.
Oh, just Retail Collective?
Yeah, you're fine. Yeah, that's it right there.
Yeah.
Yeah, if you want to just pull up a chart of the SPY, but I think it was like 409 to 404 was the gap on the SPY.
Yeah, let's see.
But we have not filled that, and I'm like, at what point are we going to fly back up there to
Yeah.
go fill that?
Yeah.
I'm like, shh.
Yeah, let's see here. Well, there's like a ton of gaps to
Yeah.
the upside now, but
And
yeah,
that's what's making me nervous, because I'm like, I know we need to go down, but I also know we're oversold, and I also know that this market is just going to be like, okay, you guys all want to get bearish, now we're going bullish.
yeah, indeed, yeah. So yeah, it's kind of the thing. So what's been eerie to me is, like, I'm sure you've seen some plots about how the 2008 analog has played out almost to a T, but instead of, like, banks going bankrupt, which marked like the tops for all of the bear market rallies, it's been basically Fed decision making or inflation reports that have been like the major.
Well, I think the Fed's also like keeping a lot of these banks afloat with their like purchasing, and like they're the ones buying all the bonds.
Yeah.
So, and they've also been able to like pump liquidity into these like, big institutions. And I'm like, it's at what point are we going to find out that they've like now misspent all this stuff and they're all leveraged, and
Yeah. Right.
they never learn. Because why would you learn if you don't actually like go out of business? Like, they take a couple of like scapegoats and they'll like let them be the sacrificial lambs, and they'll go, we'll never do this again until the next time they do it again.
Indeed, yeah. Yeah, what's been kind of wild about all that, to that point, actually, is like Neil Kashkari, like one of the Fed governors, he's, a few weeks ago, I think he said, like, he quote unquote, I was very pleased to see stocks go down after, the Jackson Hole speech, because that's what we wanted to do. And then I looked and I realized, like, wait a second, stock prices, or really like any sort of high risk equity asset, is correlated to financial conditions in a way. So when financial conditions are loosening, that means asset prices are going up, and, they're by definition increasing demand. So I'm like, but, thinking harder too about it, it's like, but these assets are in people's like 401ks and pension funds. So how did we get to a point where, instead of like the stock market just growing because people work hard and they build value for companies, that's now entirely tied to inflation,
financial conditions? And I saw that thing you posted, which basically showed the difference between like tightening and easing, and it basically just showed the S&P going up or down.
Yeah, with the available money supply, which is, yes, stupid, honestly, but that's kind of the world we live in. It's like, if they pump the money, then we deal with hyperinflation.
0% for 10 years. What do you think you're going to get?
Yeah. Yeah.
Large bull markets, and then all of a sudden when you have to put on the brakes, you have to like slam on them.
Yeah. Yeah, so it's, this bubble is just so big right now. Like, let me go to a probably a monthly chart actually shows this even better here, but I mean, is that not a quintessential bubble when, like, we've been trading above, like, distribution for the better part of what, really 10 years?
10 years, yeah.
Yeah, something like that, 10 to 12 years.
Was it 08?
I think 11's when we actually, like,
okay, that's when we got above it.
Yeah, late 09, I think, was when we bottomed out in the market. So
yeah, so like,
or go ahead.
I thought we were going to crash down. I don't know if you can see my mouse, but if you go to the right a little bit, when we did the COVID crash, right? I thought it was going to break down and fall below right here. Yep, right there. I thought we were going to fall through, and then they just pumped it. I mean, it just completely reversed and just shot up. And then I was still bearish. They were like, okay, well, COVID's happening. There was no vaccine at the time. We'd shut down. I'm like, this thing's going to get dead cat bounce and just go down. And they pushed this thing up to 480 with me being like really bearish, like the first half of it. And that was just like, okay, you can't beat them, you join them, and that's when it goes down, right?
Yeah. Yeah.
Well, I kept going short positions as a hedge the entire time, because I was just like, okay, well, nothing goes up this like ridiculously forever. So at some point, I'm going to make money on this as long as I keep it like far out, like 2 years out or a year out.
Mm-hmm.
So I had 350 puts back when it was, pushing up. Made some money on them, but I just didn't hold long enough. I sold during certain parts, and I made like 10, 15 grand on them. So.
Oh, nice. Yeah, that's solid money.
But yeah, like that entire pump, I was just like, okay, 480. Like, what? Why? Like, there's no reason why we should be that high.
Yeah. Yeah. It's yeah.
So we're finally entering this like area, which is going to be in what, like 370s, right? 360s, 370s.
Yeah. So yeah, 360 or well. I think 361 SPY I think is significant because that's the bottom from June. Yeah, so the bottom, 362.17 is the exact bottom, and I think our low so far is 363.03. So we have actually not yet made a new low for the year. So so when I saw that, they tried to crazy pump again at the end of the day, but I don't know. Like I've noticed this happened Thursday, and this also happened today. So like. Starting somewhere between like 1:30 and 2 o'clock Central Time, so about an hour and a half before close, there's just a shitload of volume that just hits the tape, just like all these like sell orders or whatever, but they're basically slapping all the bids, just basically trying to dump it. So, so even though it's ask side, they're basically going for whoever wants it. So it's basically, I don't know, somebody basically buying the double bottom bounce, but actually it's really a big institution that's just like, I need to GTF out of these risk assets because treasuries right now are 4.2%.
Yep.
And my S&P dividend's only like 2%.
Yep.
So for every $100 you get, you're getting twice as much on a short-term treasury bill right now. So
yeah, I mean, might as well.
Yeah. So yeah.
At that point. Yeah, at that point, then the question is, when do they come back, or when does the thing just dump?
Yeah, so we're at 0 dark 30, I think, right now, or whatever reference you want to use. Like we're like things can get real messy real quick here. And I think, going back to you were talking about COVID here, so like things started rebounding like really sharply. So like the pandemic was going on, but I'm pretty sure somewhere in late March, early April is when the Fed came out and said we're going to do zero interest rates, we're going to quantitative ease, and that was basically pedal to the metal.
People were just like, we know what this is about.
Yeah,
it's the pump before the dump.
Yeah, all right, but I think that's even before like most retail were really like kind of like we are like involved in stocks now, because a lot of us came in like when we were somewhere up here, so like it made it June 2021 here, so there's February, March, April, like that was the GameStop, and
that's when retail really went heavy.
Yeah, and then we just didn't realize, like, if we would have entered here, like, April of 2020 and realized, like, oh, it's a Fed policy shift that's doing that, like, we could have made
so much money.
Just, like, imagine buying, like, 100 shares of GameStop at $2 a piece and then selling out at $100 a share or 200.
Or 400.
Yeah.
It hit 500 pre-market. I remember watching it. I had a friend that sold a share at 500 something pre-market on GameStop.
Just to cover his cost basis, or
he just, I mean, at the time he was like, I paid $20 for these things, and now they're 500. He's like, I'm going to sell a couple of these, and he sold a couple at like 5 something.
Good for him.
And I was like, wait, how? I was like, did it get that high? But then I was looking back, and I'm like, I don't know if you can look at pre-market like on that day. It was January 28th, 2021. Mm-hmm. What was the pre-market high on GME January 28th, 2021? It was over 500. It briefly hit over 500. Here, jeez. I don't know if you can see my screen, but
I cannot actually. What tab should I have open to actually see your screen while I'm talking to you here? Because I'm sharing my screen, but with.
I guess I could take over and do my screen. I guess maybe.
Yeah.
But if not, I don't know if you can see. Can you see that?
Yeah, I just unshared mine.
Okay, let me go to mine then real quick, just so you can see it. Screen share. Where is
The SPY monthly
this one?
candle. It's just like that's the biggest downward hammer I've ever seen in my life.
Second?
Okay. I was looking. That's the SPY monthly chart I was just looking at here. Okay, yeah.
Yeah, but it briefly hit over $500 a share on the 28th. Look at that.
Oh my God.
So he wasn't telling a lie. He really did sell like 2 or 3 shares up at that price.
Mm-hmm.
Its intraday high was 483, but pre-market it hit over 500. It's crazy.
That's crazy. Yeah. Jeez.
All right, I'll let you go back if you want to share yours.
Yeah. Yeah. So. Yeah, I think we were.
But yeah, if you knew that GameStop and all these memes were going to take off, I mean, you could have made a killing.
Yeah, and well, if you would have known like what was the cause of like the market rallying during the middle of a global pandemic, which it really had no basis for. But I think at that time it did have a basis. That's called the Fed raising its balance sheet. I think from like $3.8 trillion upwards to
7 or 8. Yeah.
Yeah. So it's insane. And now there's this situation where they have to let stuff roll off, but in doing so, they've basically triggered a 20. Well, was it Bloomberg or I forget? I'm pretty sure it was Bloomberg, but they were basically saying something to the effect of, there's about a $20 trillion U.S. dollar short squeeze going on right now, just because people need to pay whatever U.S. liabilities that they have in U.S. treasuries, which means they need to have dollars, but there's the U.S. dollars for all the inflation that we've had have actually been
it's strong. Yeah.
Yeah.
I mean,
So it's
DXY was up, right?
Yeah. DXI, like why it's just been going up for the last like 8-9 months or so. Like as soon as they started QT,
it's because it's honestly because the rest of the world's in even worse shape than we are, which is strange.
It is. Yeah. It's like, for everything that's wrong with the United States, it's like, you got to give credit where credit's due, at least with some policies, between the late Obama term, the Trump term, and, maybe the first 6 months of Biden or so before this all really started to fester and do that. But by, I don't know, just at least being, first to the draw on like, hey, we need to
tighten,
take care of inflation.
Well, and I think the other thing is like, look at a place like China, right? Like you have... Yeah. You're not sure what's going to happen there. So people don't trust their money there, which is why these Chinese IPOs are pumping trillions of dollars or billions of dollars all of a sudden into like, have you seen some of these tickers?
Oh yeah, like HKD.
Yeah, like what?
Yeah. It's
like
crazy.
Why? It's because these guys are laundering money out of China into the U.S. stock market.
Yeah.
They're like, we don't trust this, so we're going to pretend like this is totally normal, and somehow the SEC has not looked into this.
Mm-hmm.
So, just absolutely worthless. Like, what do you think is going on? All of a sudden, China is like, okay, we're not sure about, if we can pay some of these Evergrande loans, and, we're going to probably have to step in and interject ourselves, and we're sending tanks out to the banks in China. Mm-hmm. Like, people aren't talking about this enough, but, like, they literally have, like, guards at the banks so that people, don't, like, rob the banks.
Yeah. Yeah, it's absolutely nuts.
Like, they're not letting all that information out, but that's what's been going on.
Or, and I don't know if you saw this yesterday, too, but the Chinese state banks were basically ordered to buy up as many stocks as they can to keep there's... the Hang Seng and the Shanghai from going down. And Hang Seng, like they did that a day ago. And right now I'm reading, my CNBC app here, down, 153 points, 0.9%.
And that's with them buying.
That's state sponsored. Yeah, basically like, authorized quantitative easing. So that's not working so well. Ooh, yeah, Kospi's down pretty big right now. But the Japanese index is rebounding a little bit too. But I also read that, the Japanese bank, I think, this evening printed 400 billion.
CJ, tanks in front of banks is very bullish.
Yeah. Yeah. So, Japanese stocks are going up a little bit. But, I think, I don't know. Yeah, and 10-year yields are like, I don't know. I've been
Dude, that 10-year yield's nuts. Like
the 3.88%. Like
well,
I like what I like 3 months ago. It's like I'd look at the yields and I'm like, yeah, yields are bad for stocks. I'm like, okay, that's all I really knew about it. But then when I understood, like, okay, like once your actual returns on a yield is much better than anything you can get out of the stock market, that's when it gets bad for stocks because
yeah, because why play the risk? Just buy the bonds and, you know.
mm-hmm. Yeah, and like I've actually like I've done a lot of like I've been thinking about ways to like next time I get a free like $500 or whatever, I'm like, why not just load up on some 2-year treasuries that are paying like 4.3% right now? Like I don't have to worry about that. I'll get a random interest check in the mail, and you
Yeah.
know 4% of $500. That's for $1,000. That's what 5, 10, 15. Yeah, it's $100 every 6 months or so, and like you can.
That's not
That's
bad.
not,
At
it's
least
not
you're not
bad.
losing money, right?
Yeah,
I'm
or
sure most people
you,
in Tyrion are going, that sounds much better than what's going on with us.
yeah, yeah.
But I mean,
No.
I don't know. I mean, you've read my DD, right?
I read your most recent. I read the last one I read from. Yeah, I read the one that you just posted. I think
Friday.
on Friday. Yeah, I think you touched up on.
Yeah, I think that was a very fair, because I was like, this is what I think happened. Like,
Oh yeah, yeah. Where the last pump was the result of like someone just entering and exiting like real quick. Like they entered like a really cheap share position, then they pumped it up through the
it was
auction.
Armistice Capital, which is the largest. They were the largest shareholder at the time, and they had only had their shares for 1 month.
Yeah, that's
So
sweet.
literally, they got their shares in March, and we pumped in April, and they unloaded all 5 million of their shares. So
Yeah,
they got pre-funded warrants, which are like and then they additionally got common shares at 291. So they got those things at 291, and then they sold them probably at like 7. My guess would
yeah,
be they were the ones probably putting out the bots.
yeah, yeah. Yeah, it's all. I don't know. Like you look in hindsight, it's like, yeah, why not sell at 7 when the stock price was like $5 and $6? It's like
Because a
they
lot of
were
us were in it
all.
before that. So
Yeah,
to us, we were like, oh, okay, we've been here before. But for
yeah,
them, they bought it at 291, and they were going to receive an additional 7 million shares in September 6.
mm,
And they wanted to stay under. This is just my like what I think I've pieced together from them. Basically, they wanted to basically make sure they were under 10%.
hmm
Because if you go over 10%, then you have to like actually report to the SEC why you're doing things.
hmm
So their goal was like, okay, well, we can't have this many shares, so let's unload the
yeah,
sum here, and then we'll do this again later, or we'll be
hmm
long later. We don't know at this point, like what they're
yeah,
gonna do, but like I just find it super interesting that like
yeah,
we,
yeah,
make that run. We think it's a short squeeze, and it's literally just them probably slapping the ask, and we're like, yeah, it's going up, like
yeah,
we're
yeah,
squeezing them, and then like, but like
yeah,
you have to think, okay, well, these guys are literally like just got in, they've only had the shares a month. I wasn't expecting them to sell their entire position.
hmm
Like that's
yeah, yeah. And I think too, I've been thinking about this a little bit more, like how a company like that can take 1 million, 2 million, 4 million shares, or maybe like something in the ballpark of like 5 to 9.99% of a company's shares, be able to pump a price 2 to 3x the starting price, and then give it the appearance of a short squeeze or whatever. And I'm beginning to wonder, like, if all that option volume that we saw in there wasn't like Armistice knew that they were buying up all these really cheap shares, and they were over time, like just buying like lots of 50 to 100 like $3 calls, three and a half
yeah,
dollar calls, kind of creating that ramp so that when they
exited.
did sloppy ask, that what was it, March 1st or something, April 1st, I forget when
It's
they.
probably selling covered calls that they made sure hit.
Hmm
We got assigned.
Yeah, yeah. Well, no, they sell the covered calls at the top. So
Yeah,
like,
that's what I'm saying.
yeah, I remember. Yeah, the ADL indicators, like accumulation distribution. One thing that I've noticed is quite reliable for finding tops or when they're about to let the price waterfall is whenever you see ADL like really drop while the stock is like squeezing, you know, like 50 cents to $1 in like really short amount of time. So it's basically saying like somebody's unloading up here, which is how you get distribution to go down. You know, it's like kind of like what happened in the SPY today and also on Thursday, like right at the close, where someone's like, I need to dump a huge position, but, you know, we'll basically take every single bid that comes our way, and then they can just, you know, we'll set the ask price way up here. And then when a bid comes, it's like, oh, we can buy up here. So they basically absorb all that liquidity, force them to sell at a high price. They make even more money, and then retail always gets caught holding the bag.
Yeah.
Yeah. So, but hey,
but I feel like we're getting better about identifying it, though. Like,
yes, I think we are too, because just just having really not much else to do in this bear market other than flip SPY puts and just long for the days of $15 ATER shares again.
Yeah. I mean, at this point, I'd be happy with 5, 6, 7, 8. That'd be amazing. But we'll see where it ends up. What do you see for this next, like from the TA's perspective?
So TA perspective. So so I don't know. I've been paying a lot more attention to like weekly and daily charts just to like it's been helping me, I think, just get better entries or just like know when to say like no, I'm staying out, or I'll take a shot. Like AVYA was like. We can talk about this ticker here in a little bit, and I know several people are still on AVIA, but someone's like, "Hey DZ, did you look at this ticker?" And I looked at it, and I'm like, I don't know like anything about this stock, but like at the time it looked like an obvious inverse head and shoulders. So like I bought a bunch of $2 calls at $1.60, and then it got up to 210, and I think I was just barely able to get out of my position, like with
before it just dropped. Yeah,
before they IV crushed the options. And yeah, I made like, despite like buying like 250 options at like 160, like I did not make a single penny on those, and the $2 ones like went into the money briefly, so I was able to
get out of those.
Yeah, it could have been better, but like if I'd have known about that like 2 days ago or something like that, I'd been like, but it is what it is. But like, yeah, that's a good one. I thought it looked pretty bullish to me, but yeah, here we're sitting on basically the top of a massive like accumulation. I don't know if this algorithm's like totally good, because like here it's suggesting negative 143 a share here. So
yeah, I don't think that's right.
That's not right at all. Yeah, so I take that with the no way that's possible here. Daily should be a little bit more accurate though.
Yeah, I mean we're getting down towards the bottom, I think.
Yeah, we're really at the bottom here. So basically, I was looking at Astro's code here for this Wyckoff sniper here, like the these clouds. They're basically like, it's basically the entire like depth, like the book depth, for the stock, like where people were slapping the ass. So like some like sell orders up here in the light red, and then most of your sell, like the biggest volume of sell orders are at the top of these green cloud or red cloud. So inverse is true obviously here. So there's a lot of accumulation going on down here, even though like we're basically in the doldrums here. Like we've been, like I posted on my stock tweets, I think it was like 2 weeks ago. I'm like, I was looking at the chart like right about here, and I'm like, the CPI just came out, very hawkish Fed, and it just seems like people are just going to get ready to sell here. But like at this point, like smart money, they would have sold already, like back here and here, where the stock is like $3-4. Even 290 or so, assuming, they were, buying shares at 210 and then, giving them to retail up here at 290, thinking like, oh yeah, we're about to go back to 354 or whatever. But I think at this point, it's like probably people here, they get to these, this is I think a linear based or a regression based volume channel here where, algo is just like as soon as it crosses here, that's where they start dumping. So you notice how clean the tops are here, around this red line here. So they, just sell here, and then here it's all, light volume algos, and then when it crosses above here, then the volume turns back on again. Oh, we need to sell again, and then back here and here and here. And now it's all these short positions probably from the last, I would say, 2 months or so. People putting bids down here like, okay, I'm going to slowly cover. I'll cover like 5,000 shares here, 10,000 shares there. You see that in the tape too, where I think that's what's going on anyways, is, just slowly like
starting to cover. Yeah,
gradually covering, because even though like we've had several shit days in a row, like this 190 level is actually quite good. And I was gonna say too on my stock puts, I'm like, yeah, I'm basically like I drew a violin, so like basically like you have a thin neck, and then if it drops down into the belly, which I put between like 2 and 220, I'm gonna buy 60% of my allocation here, and then because I fully expect from the crowd of retail that is not on StockTwits or not on Reddit or who's never read a sentence of your DD or my DD,
Yeah.
where they're just gonna be like,
Oh, this seems undervalued, and
yeah, or like stock markets, going to zero. My ATER shares are worthless. So they buy them at $3 or $4. It gets down to 170 or one. As soon as it gets into like the $1 range, it's like I give up. So I was like, hey, I want a couple hundred at this price here, please.
Yeah.
So yeah, so come to daddy here, and just I immediately yeah. So I think last week I got, or no. Yeah, I got a couple hundred at like I think $1.87.
yeah, I was buying some in the 80s, and I was like,
yeah,
I'm not going to go all in because I want to save some just in case it does drop a little bit lower.
yeah.
Because if I can get that average down as much as possible, I'm still in the mid threes. So if I can get my average slightly down lower, I'd be happy.
Yeah. I think I just got my average down into the actually below 2 because like I remember I bought that the last time I think it went to like 210 or so. I was buying at like 220, 215 or so, and I got a bunch at 210 to make my average 218. And I think I just got it to like 198, like after
wow.
this buying over the last week. I have a really, really great cost basis here, and according to Webull, it's like in the like 0.01% or 0.1 percentile of
where people have their shares.
Yeah, anybody with all ATER shares are practically worthless, right? Well, okay, not worthless. Let me take that back. I mean to say not profitable. So meaning that everybody that's kind of bought down here, or even like legacy holders who bought one that was at its all-time low of 180, I think those have since been like flushed out. So,
yeah. I was gonna say I'm just taking a look. Let me see. My daughter, both my daughter and I have my son. I don't have an account for him yet, but my daughter's average is she's in the 280s.
That's still not bad. It really is.
I am now in the threes, like 340s.
Yeah.
But like, I've been averaging down. What's up?
Yeah. I was going to say, have you been selling any covered calls like on your ATER shares?
No, not on ATER. I was going to say there's not a lot there.
Yeah. Yeah.
I'm just saying you don't get much money for it, so I've just been like, I'm concentrating on the ones that are.
Yeah.
I mean, at this point, everything's just down.
Yeah. Yeah.
Like I'm looking at like with the premiums, I'm like, is it even worth it?
Mm-hmm.
Like, what can you sell like an ATER call for now?
Well, yeah. Whenever the ATER today, I know like it popped up to like $2, and I sold like at the money covered calls. I think at like $9 a contract, and those are now down to $4. So as long as it holds there, like right at the open tomorrow, I'm probably just going to close those out and just keep the premium there, and then reinvest it whenever it gets deeper into this blue cloud here, which I assume there will be more retail capitulation here. So, and it looks like the bottom of this blue cloud is $1.72. So
if you were to sell a covered call right now, would you get like $3, $5?
If you sold it's
like $4 for 2.
Actually, well, the best bid on the $2 contract expiring Friday is $3 right now.
Yeah.
Yeah, so it's not even really worth much or so, but
yeah, I'm like, I'm not risking my shares for that.
Yeah, absolutely not.
For $5? Nope.
No. Yeah. I mean, yeah, it kind of works in periods where like there's just not a lot going on. Like if there's no news that you're expecting and the thing's just range bound, all you have to do is just like wait an hour, draw a line where like they're upping and downing the price. That'll give you a general trend for the day. It'll usually make a wedge in one direction. Then you can kind of make a call saying, well, if it's at the money here, then I can sell it at the money call, and even if it like stagnates, like I'll make money based on the theta decay there for a covered call. And I do that with like the section of shares that I just buy and swing.
Yeah.
Because if it goes up, you sell it in the money call, and then once it drops out, then you get you're going to collect at least 30 to 40% of that premium. So It's helpful, and ATER, even though it hasn't been super volatile lately, it's just volatile enough where, that's a decent thing. And, I look forward to the day where, we see, $5 to $10 again, and the IV is like triple that. So, so even just like holding overnight, like, if you sell covered, call it open, and then, like far enough out the money that expires on the week. And then even if it goes up $1 or $2, you're still getting,
Yeah, something.
50 cents per contract, just on the theta decay alone. So, Wednesdays and Thursdays are the best days to sell contracts for that reason, just because like it really needs to move out if the IV, of course, is high enough. So,
Yeah.
So yeah. Should we restart the?
Yeah, I was gonna say we got about 2 minutes left, so I can just
Yeah,
restart it now. Give me a
yeah,
second.
sounds good. All right. While you do that, I'm gonna go get some water.
Okay, sounds good.
Up the share.
All right, do a new meeting. We'll add DZ again. He can join whenever he wants. Are you guys good listening in? Everyone's fine? Screen share. So back to you guys. Sorry, I've been talking to DZ, but yeah. People on Baba board were expecting a pump today. Got none. Yeah, Baba didn't do much so far. So 172 is the bottom. I mean, that's we'll talk to DZ when he gets back. But I was going to say, I mean, it's going to be. Oh, there he is.
All right. Hello again.
Yeah, Shadi was asking, do you think 172 is the bottom for ATER?
Yeah, I'll grab the screen here real quick. I'm just going to use the chart here. So, yeah, so let's check here. Yeah, so
The sniper tool has what, like 172 is there, and then if the worst case scenario would be like 157?
160.
160? Okay.
The absolute bottom here. And this does move from day to day here. So like these
can shift down. Yeah.
Yeah, it can shift down or shift up a little bit here, but these have been pretty steady for like a really, really long while here. Yeah, like yeah, it looks like the lowest it's been in months here is 152, and right now, what did we say it was 160? So yeah, the bits have been moving up at the bottom of the depth chart there. So yeah, it looks like this is going to be an accumulation for at least a few more days, probably, unless of course there's a massive like central bank intervention in the next couple of days here, or
yeah. And I was just going to say we have I think some sort of event, don't we? Isn't there earnings in November or something like
that? Yes, looks like November 8th.
Yeah.
Yeah.
So could be accumulation until then, or probably right before. They usually try to run things up beforehand and then drop them after. If you go to last earnings.
Yeah, so it looks like right about here.
Yep, they run it up beforehand and then
yeah, and then they dumped it.
Yep.
Yeah, so I was away obviously all of last month. So what was the thing, I guess, behind like why this dumped in earnings? Like, was there another goodwill or anything of that sorts? Because it looks like it rebounded pretty good the next day.
Yeah, I mean, it was fine. Like basically, they announced that there could be more M&A, and they would probably have to dilute for that. So, for some investors, they may have gotten out on that news. To be honest with you, there was nothing significant that I saw. Like, honestly, they sounded more optimistic than they had in months. Like, we've been listening to those calls for, I don't know, like 8 of them, it feels like. And this was the first time they were like, we really do think we can turn things around in 2023, like kind of get things on track. And they're like, we're not going to play defensive anymore. Like, we can start like looking at doing some M&A, and it actually sounded more optimistic than I've heard them in a while, which means that maybe they want to buy back in. So push it down, accumulate, get retail out, and then make more money.
Yeah, it's funny. Yeah, it looks like even through this earnings here, it was like, let's see here, 1, 2, 3, 4, exactly 5 like green candles. So like, that's a FFIE sequence, and then earnings, and then 1, 2, 3, 4, 5, 6. Yes, looks like, 7 total candles here, ending with this red one here. So this was 13 sequence here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yeah, so 13 down. 13
I
up,
think you
13
skipped
down.
one. So that was the red one, and then
And then
1,
2, 3, 4.
that's in the market crash,
Yeah, yeah. So this was the
right?
that island up here.
Yeah, there's a gap up there too, right?
Yeah.
Is there a tiny
yeah,
gap? It looks like at 3 something as well. Back up there.
there is.
Yeah, I think there's a gap at like 315 or something.
307, 307 to 307 to 315. Yeah.
So
Yeah, I mean, ATER is probably going to have at least minimum of 1, if not 2 or 3 more runs. I think up into this $3 range, just because at some point, and actually to that point, I think not just with ATER but with small caps in general. So I was reading one of Zero Hedge's premium notes, where they just basically take they have to pay these banks stupid amounts of money in order to get their subscriber notes. So the big guys like Mike Wilson from Morgan Stanley, Michael Hartnett from Bank of America, Charlie McGillig from Nomura, they all post pretty good analyses, because unlike the clowns on CNBC, these guys are like, hey, we have we have hundreds of billions of dollars that we're managing here, and we need to make sure that we're finding ways to make money. So in the equity space, a lot of those guys agree, but obviously you never see them on CNBC because they're telling everyone oh, bottom's in, time to FOMO buy, right?
yeah.
Yeah,
well, I mean, they're like, but we need to get out.
Yeah, yeah. So
hey,
maybe Kramer's there, just they can't say that, but he does it because everybody knows it's one of those unwritten rules. If you want to do well, you just do the opposite of what he does.
Yeah, I mean,
and maybe he's actually trying to do a service in that way. I forget. I was trying to think of a movie character where someone's just always doing these, he's kind of like Severus Snape from Harry Potter, where everybody hates him. We think he's the worst professor there. He's really behind everyone's death, but really he's been doing stuff behind the scenes, kind of saying do the opposite of me without actually doing the opposite of me.
Yeah.
Because everything's corrupted here, or whatever. But anyhow, Hartnett said, his latest note was on the bond crash. So basically the fact that these yields have went from 3.3 to 3.8% in less than a week or so, which is basically SPY could have tested 350 easily just based on those soaring yields and all this, macroeconomic, headwind that's, really fighting it or whatever. But he's the fact that we have not reached a new low yet in stocks, yields have gone from, I think, 2.3, 2.4% at the June highs. Or, no, they were 3.5. Or, 10 years were 3.2, I think.
Yeah, do you want to pull that up on the chart real quick?
Yeah, let's see here. That's.
Are you able to pull up the one where you kind of compare the different?
Yeah, here's the TMX here. So let's...
Can you overlay the 2 and the? I remember there was some sort of tool I used.
Yes.
I need to learn TradingView better, but I know you can do it where you can overlay.
Yeah, I've never actually done an overlay, honestly, but I can do 2 sides.
2 side, yeah, that works too.
Yeah, we'll just full spot. Okay, let's switch this to daily here. Okay, so and let me scale to
logarithmic.
Yeah. Okay, so there's June. Okay, now let's get June on this spot here. Okay, yep, so we'll put June far left here. Yeah, so it looks like, the SPY, bottomed at, let's see here, 362.17 on June 17th. And on June 17th, that coincided. Well, actually, no, the peak in yields was 2 days before that, and it peaked at 3.48%. So since then, there was a lot of relief. So people started buying bonds, SPY squeeze, for the next, July and August, for the bear market rally.
Yep.
QNRX gets down here to basically the bottom of the deep blue cloud. So like the lowest it could go on the daily, it starts rebounding here. And now it's just been short squeeze mode for, the better part of, let's see here. So yeah, almost like 8 weeks now. That's crazy. That's a long time for yields to just go vertical, basically.
Yeah, like people were talking about it on Bloomberg today, and they were like, I can't remember the last time I've seen it like this.
Yeah.
They're like unprecedented. Yeah, like you don't see moves like this.
Yeah, that's 130 basis points. Yeah, and since early August, basically. But in that same amount of time, the
SPY dumping.
Yeah, it overshot. I think so like May, early June, it only topped out at 414, and then by late August here or mid August or so, right around that OPEX actually is when it peaked. Gets to 431. Hartnett in another one of his notes actually, he's like, oh, the mood's no longer apocalyptic here, so we're going to short, I think, the SPX at 432.5, and it got to within a half a tick. So at 430, I think 4315, I think, is the highest it got, and then it's just been in free fall ever since. So he nailed that short to within a half a point on the SPX. So it's crazy, how accurate he was.
Those guys are, Now, I mean, I'm just looking at your sniper tool. I mean, it looks like we're coming up on the bottom.
Yeah, we are. Yeah, really close here. Yeah, so there is. I think part of the reason it didn't go further here because people were anticipating, yes, there's going to be a bounce here, but I think when it does finally bounce, it's going to happen.
What is that line? Is that the 200 or?
This line here, this is the regression base.
Oh, okay, regression, okay.
Yes, this is basically where most of the bids are. So there are a lot of people actually buying here. So normally these lines, it'll wick through a little bit and then it'll come back above here and then it'll accumulate as support here. So it looks like, when it does rebound here, it's going to go probably from I think it does need to test a new low, and I think it's going to, maybe go a little bit deeper into here, and then at some point it's going to, people are going to get too bearish here, and then that's when they rip it off. But one caveat to that, though, so you may have seen that the last Friday was a record amount of put transactions.
Yep.
But the net of those was actually those were net sold, not net bought. So the actual positioning in terms of puts, people started selling a lot of puts down here.
Yeah, so they're a bounce.
A bounce up here. So if it actually goes down here, then those puts are not only going to lose delta and gamma, but they're also going to theta decay too. So that's basically going to be like an inverse trampoline, except you're jumping up into the trampoline and you just come straight down harder. So yes, I think.
I mean, that's what they say. Most major moves happen when things are overbought or oversold.
When they're oversold, yes.
Especially so it is a possibility that they can fall through the trampoline and just go straight down. But, I don't think we're ready there yet. I think they might still fill those, that gap up at the 407 or whatever it was.
Yeah. Yeah, so this was the CPI report. That's a big ask, to come up here with, 3.5 percentage points of, rate hikes already priced in here. So you're asking for 500 points in the SPX, and basically that's pushing the current multiple of 17.3 up to over 19 again.
Yeah, probably won't happen, but I'm just saying
it's certainly possible.
But I look back, I didn't think that August was going to happen. So
yeah, but I didn't think it was either. Yeah, and I got burned, especially on the UVIX, because I'm I think they're trapping people here, and obviously that was extremely wrong here. But from a historical perspective, though, it totally made sense why this big bounce happened. And listening to a guy, Jeremy Grantham, from GMO, he's a market historian. He runs a very large fund himself here, but he's every every major super bubble like the one we're in right now. So there's three phases. There's the initial drawdown, which is just people realizing things aren't perfect, and that comes after like, well, the first sign of that is the divergence in small caps versus mega caps, where like mega caps were screaming into January, making new all-time highs, while all retail favorite stocks were reaching like 52-week lows, like after their peak in February, and everyone's like, why isn't it going along? What's going on here? Markets are up. Why is Apple going to 180 while ATER's going down from like $25 a share to $5 or $8 or whatever it was? And that was that. It's just big money was exiting, and they crushed the small caps first, and then things go down, everything just gets drawn down, basically using interest rates as the markers for the algorithms. But then at a certain point, like, when so much selling goes on, everybody gets like super bearish. But it also coincided with them touching I think, what was it? It was a trend line, I think, going all the way back to the 2008 crash. And then, they connected with the COVID crash. So basically right around here is when it touched, and then basically short squeeze, all the late bears here. And then,
Yep.
you get to the top of the bear market rally, and, that's where like you've had 2 more months, you've added all these interest rates hikes, inflation's still soaring across the globe, geopolitical tensions are, getting worse and worse. And now people are like, okay, this big red candle here, Jerome Powell says we need to tighten or else we get hyperinflation. Market goes down. It almost recovers that entire move, and then you get the CPI report, and it's like, we're still increasing, month over month. Core inflation still, it's up 0.6% year over year. That's not slowing down anytime soon. And now, inflation's high. Now you actually have,
a reason to go down even more.
Yeah, and then.
Well, that's why I think it's going to go up.
Yeah, yeah. It's basically.
So it would make no sense to go up. So that's what it's going to do.
Yeah.
I mean,
exactly.
on your look at your stochastic.
Mm-hmm.
It looks like it's curling up.
Yeah, yeah. It might even start tomorrow, honestly, but I don't know. Maybe tomorrow's an elaborate bull trap, potentially.
Yeah, I mean, it's possible. I've gotten to this point where I'm like so distrustful of the market. I'm just like, whatever is going to be the opposite of what everyone thinks it's going to do, that's what it's going to do.
Yeah, because, Bitcoin's back up over 20,000 a coin now on literally nothing other than, oh, hey, maybe we're just due for a technical bounce. And I think that's really all it is. And it's, big money's already on the sidelines. If anything, they need more retail to basically buy and hold, thinking like, oh, we're actually buying the dip here. And especially in stocks like, Tesla's been holding up really well. Apple's held up really well. But most of the other tech stocks, like Meta today I saw, is actually below its pre-COVID low, which is pretty significant. So
I don't get their plan. Like that whole metaverse, or just, I don't know if it's going to catch on. I know they still make money in ad revenue, but like I prefer Google, because Google at least owns like YouTube, and like it just to me, I've never been a huge fan of Facebook. I think I understand why. Obviously, people, the advertising stuff and their data is what's valuable, but at the same time, like I feel like they at least were smart and bought Instagram, because Instagram obviously is the more popular of the two platforms now with younger people.
Mm-hmm.
But people got mad about the change they did, I guess, to the algorithm that showed you a lot more ads for Instagram. So I don't know. I was hearing people complain about it.
Yeah, they'll
get over it.
Yeah, it's still my favorite social media platform, maybe besides Twitter these days. But I don't know, man.
If you give me a choice between Amazon, Google, like Tesla, I'm gonna go with probably Amazon or Google. Like Meta is not up there for me. Like it just for me, I think there's something that's on the downswing.
Yeah, certainly.
Like,
I'd say I would. I don't know. It's really a coin flip for me between Google and Amazon, and just because like Amazon, like it's a reliable business. It makes a lot of money, and it's like there's a lot of things that it can cut if it needs to. Google's kind of the same way too. So it's not like they're going to be unprofitable. I don't know what their PEs are, but the one that I'm absolutely like avoiding like the plague until, a Fed pivot or, Putin gets shot or something like that is, Tesla. Just because, they're like 100 something PE, I think, going on right now. And, they've been holding really, really strong. And I think it's, kind of like the Apple phenomenon where everybody sees them as a safe haven, can't go down no matter what happens in the market. But at some point, like,
there's a breaking point for those people.
Yeah.
Because most of them are not sophisticated investors.
Mm-hmm.
Like, I have a lot of buddies of mine that have just been buying Tesla, like, nonstop for years. And they don't understand how the market actually works, but they just know the name Tesla and they know it's gone up.
Mm-hmm.
But if the stock goes down enough, they will sell.
Yeah. And they need to realize too, like, even, so, like one of my friends, like he likes to say like, oh, they have all their orders, placed through 2023 and they're guaranteed this revenue stream. I'm like, okay, great. So that's already priced in then is what you're saying to me, right? So
have you priced in a recession?
Yeah. Have you priced in the federal government not providing liquidity, when you clearly see that it's correlated here? Tesla is definitely the bubbliest of the bubble stocks.
Yeah. I mean, I know Burry was saying that he wanted to short them again, but it seemed like he already shorted a bunch of other things. So
yeah. Well,
he's always like, the deal with him is he's always 2 years early. Whatever he tells you the sky is falling 2 years from then, that's when it'll actually happen.
Yep. That's a truth for sure.
Like he's been saying the sky's falling for like 2-3 years now.
Mm-hmm.
And
I think a lot of guys have kind of been like echoing that, like after like all the COVID stimulus, it's like, hey, this is going to result in global hyperinflation.
Yeah. I mean, they should have been tightening months ago.
Yeah, they were at least 6 months behind.
I think they were like a year behind. Like, listen, you're hitting all-time highs. Maybe you should take your foot off the gas. Like,
yeah, this isn't growth. It's wealth inequality.
They kept talking about that at Fed meetings, and I'm like, yeah, you're the one causing the freaking wealth inequality. You're basically just allowing the stock market to run rampant. In the meantime, like, people are struggling.
Yeah, it's like, most normal people. Some people complain like about these stimulus checks and like
it's a tiny small.
You got $1,200, to just kind of help things out. And sure, like given everything else that was going on, like there was so much like maybe sure it was a little bit of overkill, but even then, it's like it actually helped people for a while. The rest of this money goes to the banks in the form of these 0%, borrow as much money as you want from the Fed. And then just, lever up 20, 50, 100x, and then, just send your stocks to the moon. And then right when, November, December, January, comes around, it's like, oh, we're about to raise interest rates again. So what's everybody do? They sell.
Yeah.
I try to tell, my Tesla friends this too. It's like, there has not been a single insider buy on Tesla in 9 months.
Yeah.
Yeah, so it's like they're not buying this dip, so why is retail? And people are like, oh, I'm looking 20, 30 years ahead. And the issue I have with that, like, I hope they prove me wrong. I really do, because I want to see obviously, these are really great friends of mine that have Tesla, and, they made a lot of money already. They want to make more, and obviously I want them to.
Yeah, I've got some, but I'm also realistic about it. I dumped out a bunch of my position after, like, the stock split.
Yeah, but if the United States stock market is anything reminiscent of like the Japan 1987 stock market, where because of all this insane money printing and wealth transfer, that we've had to basically the top 1%, that own all these these mega cap stocks and have their prices hyperinflated. Like Japan's market has not recovered, from its 1987 highs, and we're in 2022 now. That's 35 years.
Yeah.
So like. Tesla may never see an all-time high like that again. So the only way that you monetize your Tesla shares, especially if you bought them pre-2015, is just, sell some deep out the money calls to somebody expecting, it's going to get up to, 400 a share again, split adjusted, of course.
Yeah.
So that's just my take on it. Like, and for the record, like I absolutely like, Tesla's like, even like when the price does drop, it's like, it's still, it's a good company. Their electric vehicles are everywhere. It's just, if you price them like an electric vehicle company, like Ford, for example, which has been
Yeah, it
around
doesn't
for,
make any sense.
it makes no sense.
They're a technology company. That's what they're being priced as.
Yeah. Yeah. They're a car company priced as a tech company.
Yeah, like,
But
I mean, I know they also have the solar aspect too, and they could probably make good money there if they. But the problem is the technology's not there yet.
yeah. And like, look at, like
The shingles look great. Like I saw the prints for those that they look great, but at the same time, like I don't think they're efficient enough at this point.
no, it's just emerging technology here. And, oh God, look at this here. So this
Double
is,
top,
that looks like a double top. Yeah.
or triple top, right?
Yeah. One
One,
here,
two.
one here. Yes. So yeah, they had one right before the split. It pretty much has played out like Amazon had their split. They peaked a couple of days before. Tesla had their split, peaked a couple of days before Google as well. Yeah, it seems like 3 to 4 days is like the time to get out here. But yeah, there's crazy accumulation here. Just like for July and June into early July here, and then their earnings where, yeah, that's a thing. So I want to talk a little bit about what's going to come or for the next earnings season. Excuse me here. So you saw the FedEx. I'm sure everybody saw what happened with FedEx. They said, we're a harbinger of what's happening in the global economy. We warned you. They basically, and then as soon as they said that, they just detonated their share price. It's been, it's down 25%, I think, since they gave that warning. So, and then they actually, they did more or less miss their earnings estimates, pretty badly here. So Tesla, they reported, the thing that I remember from that report was, or their earnings was, they needed to sell 75% of their Bitcoin just so that they weren't negative on their earnings per share when every single analyst on Wall Street was positive. So just by doing that, as long as they show EPS is positive and then they show relative to expectations, the algos are going to read that, and then it's just, blew up immediately, and that's just went, straight green dildos, for the next
couple days.
A couple days or so, which was just insane. But you read it
they have some very creative accounting from what I understand.
Oh yeah, they certainly do. So it's the fact that a big chunk of their business is in China, obviously, their currencies been falling against the US dollar, and this has been going on for the last 3 months at least. On top of the fact that they've exhausted basically their main their cushion, that they I think it was a good business move, obviously, for them to exhaust it, of course, but they're basically set up now where okay, the people are paying in Chinese yuans for my Tesla vehicles, that's not going to do well against a really scorching hot US dollar right now, which has been really elevated for pretty much this entire period here. So how are people going to justify $276 a share when the company's still losing money? Do they really want to pay that multiple, for 10, 15 years of growth when, for at least the next 2 to 3 years, everybody across the globe, fewer people are going to have money for new Teslas. You need money for, manufacturing for people. And then you have these, these currency headwinds that are against you. So you tell me, does it, do you really go back up to all-time highs from where it's at right now? Yeah, I think short term here, I think, 220, 230 is probably almost a certainty, I think, at this point with Tesla. And then you get, this is kind of the line in the sand here that I have here, and I think it gets to, back to its pre-COVID range of 158 to 160.
Yeah. And if that happens, then
I'm probably, I might take a leap.
I might. Yeah, I was gonna say I might take a look there.
Yeah,
there's
money to be made there for certain. It's that's the price. I'm okay, I could be comfortable owning a few Tesla shares at 157 to 160, or try to get a multiple of 100 if I'm fortunate enough to have that kind of cash by the that way, at least I can sell $200 call to somebody else that's it's going to move next week, and sell to somebody on Wall Street Bets. Yeah.
Join the Theta gang, right?
Yeah, join the Theta gang. Yeah, yeah. I'm actually curious here since we're talking about that. I did actually open a Tesla Q position today. I mean, just a November, I think a $45 call on that. So if it does go down, then let's see here. Yeah, so yeah, price is 276 right now. I could sell a $300 call for $61 like today. That's crazy. So like, yeah, let me see here, 61 divided by 275. Yeah, that's actually not like that
lucrative.
Yeah, not that lucrative. That's like 0.2%, I think, of your investment on a covered call here. But let me see here. If I sold a monthly at 300, so that would imply pre-post, or yeah, I get $865 for that. So 865 divided by 275. That's about 3%. That's not bad. 3% a month on, when you're making over 3% on, next month's like MOPEX contract, like that means there's a lot of IV that you're also selling in that contract as well. So yeah, it's actually not a bad deal. That's like one of the reasons I want to have like
a couple of shit. Yeah.
Well, 100 shares of Tesla, just so I can,
write some calls on it.
Yeah, just mine that volatility, from them, and use that as just a passive income stream. Like, it's $800 a month. Like, you can do a lot with that.
Yeah. Well, I mean, I know you and I talked about doing some sort of thing where we can figure out. Now we got 10 minutes, so we'll probably just end it at the 10 minutes if you're fine with it. There, yeah. But yeah, I was going to say, because they were already joking with me, saying I'm going to be cranky tomorrow because it's past midnight.
Oh, yeah.
It's all good.
Yeah.
But I was going to say, I mean, I think if we put our heads together, we should be able to write some sort of algo or some sort of bot for the Discord where, like, literally can monitor, like, volume, like, things that gap up, gap down. Like, it's almost like a scanner, but it could, like, just alert people.
Yeah.
Like, send out a mass, like, hey, listen, this stock, hit these markers. This is considered like an algo, Yeah, you can set it for different alerts where it's like, this thing's like, we can play with it, obviously, and back test it and see if, how successful it is. But, like, I think if we monitor certain things like volume, things if they gap up or down, if you add some additional, the nice thing is we have the ability to have like multiple people look and like kind of like, okay, so if we see something like some red flags on a stock, we can just be like, that's just warrants or So it'd be interesting just to see if we can combine some TA with some like like scanners and see what we could figure out. You said you wrote something for Thinkorswim?
I need to learn their platform a little bit, but yeah, that's kind of my end goal here, because I have, like, when I buy, like, if I'm going to enter like a really like a large option position, not like 0 DT like SPY calls or puts or whatever, but like, I wrote kind of my own Black-Scholes pricing, and also just a script where, like, if I assumed a waveform of sorts, where, like, the price action does this, it's like it goes here and then you go here in X number of days, say like 8 days or 13 days, and then it retraces, by the end of that point, then you can actually like reprice that option, as it goes up and down there, just to say like, okay, are you actually making money on Theta? I don't have anything to really, like, I just assume IV's constant, of course, so it's really only Theta, Delta, Gamma that change, as, fluid functions there. And it just says like, how much money would I make if I did this scenario, like selling puts versus calls or whatever.
Sure. So did you try the optionality thing yet?
I did, yeah.
It makes it really easy.
It is, yeah, pretty easy. Yeah, I took I think what was it, a Microsoft put spread. Yeah, I made like 20% on that, and then I put it in some really like like I think 4DT, like UVXY, and then I lost like 80% on that. Like that, I wish I knew then like what I know now about like how not. I mean, I've known for a long time like how like they price the UVXY, but like thinking like okay, we need our VIX spike to mark the end of this bear market, but VIX actually does what it's been doing, in bear markets because like people know like you need to sell it off, but volatility just stays suppressed because either the market's like really well hedged or you just need it to like wear down long enough to where people actually give up and then you can get your spike.
Yeah.
So you need to get a maximum number of people frustrated too, but that's been going on for 9 months now.
Did you save that VIX Central? Just so you can keep.
What?
Type in VIX Central.
Here?
No. In like your browser.
Okay. VIX
Central.
This?
Yeah.
Okay.
Should be that one right there. So if you ever want to like deal with this and deal with the contango, but you can see right here, these are the months. So on the bottom there, October, November, December, you see those? Those are the VIX futures. So your M1 is the one that lines up with October. So your M1 right now is right there. Your M2 is November, which is right there. So if you look, the contango is actually dropping on them. So that's why the UVXY is going down. Because the VIX futures are going down.
Yeah. Interesting. Yeah, so they're pricing. Interesting that they're pricing it down going into. But 29.7 is still actually pretty high.
And obviously this can change, but like these are these VIX futures. If you go back, you can actually look at historical prices on this thing.
Okay.
So interestingly enough, you can kind of see what's been going on, right? So like, you probably want to go to. Sorry, this is 2008. You probably want to see. I think go to like a crash.
Well, it's October 16, 2008. This is like right after the Lehman Brothers.
Yeah.
So interesting, that they priced it from 63 to 42 to 35. That's going to be actually some really good money to make, I think, later on in this bear market is taking UVXY puts.
And shorting it.
Yeah, just short every VIX instrument, when it's up there. And make sure you can withstand like that initial like surge of volatility because there's always going to be shakeouts up there. But let's go to Volmageddon. I remember was like February 2018, I think. Let's go here.
And then get prices.
Yeah, so hold on, we got 3 minutes still. I want to find this one we get.
And you got 3 minutes and 40 seconds.
Yep, just looking at February 2018, so. The inverse VIX short-term ETN went bust amid a surge in market volatility, an event which was eventually dubbed Volmageddon. Yeah, so I think the VIX, this one, it was priced at 17.7, but it spiked up, I think, over 40.
Just randomly?
Just randomly, yeah, because there was so much short interest, I think, and I think it was
got crushed down.
Yeah, and then suddenly, something I think happened in the news where it's like, okay, people needed a hedge, and then it just created a runaway short squeeze
on the VIX. Interesting.
Yeah.
I mean, they can manipulate it just because obviously they know how the equation works. So, at any point, they can kind of mess with it, and that's why they get in trouble sometimes for messing with it. So it's like, I just wanted to let you know. So if you ever want to take a look at the UVXY, this is more what you should be looking at instead of just the VIX itself.
Yeah. Although that said, where you do get those exacerbated price moves in the UVXY and the UVIX, which I've also flipped in and out of a little bit. Yes. They, if it's relative to the next month's expiration, then it's really going to get its multiple in price based on how much that front month like just spikes relative to next month's pricing or so.
Yeah, I mean,
Right.
yeah, I was just gonna say if you want to take a look at this is a fun little site, and then if you want to, I've got a newsletter as well that if you guys are interested, I can provide you with this guy that I've been listening to on like volatility stuff. I usually only pull them out when things are going really badly in the market because that's when usually he makes the most money.
Yeah.
But he's one of these guys that understands the contango and the difference between like all this stuff. There's a lot to it. I didn't realize because it's always like theta decay all the time.
Yeah.
On all these instruments, and so.
Yeah, the beta decay too is actually like that's why like it just
it's built in. Yeah, just like constantly rolling like options and So, all right, we got a minute left, but good catching up with you, dude. If you want to do this again sometime this week or next week, let's make a more like a normal thing when you're on the normal schedule.
Yeah, definitely mostly normal schedule. I think through November. I have one work trip to Rockville actually. November 22nd through the 28th. So I'll be around, and actually I know that's your neck of the woods, roughly speaking. So yeah, we'll be in touch. Yeah.
Yeah, I think it's near DC. That's near DC, right?
Really close to DC. Yeah, it's like Silver Spring area of Maryland.
Yeah, I'll figure out a way we can maybe get a beer.
Yeah, that'd be cool. Yeah. All right.
All right, sounds good, man. Good talking to you.
Take care. Yeah, good seeing everybody, and we'll talk again.
All right, sounds good, man. Peace.
Yeah. Bye-bye.
All right, stream. I stayed up late for you and DZ. All right, you guys have a great night. I'll talk to you tomorrow.